We have seen Bitcoin hit multiple new all-time high prices over the past couple of years, followed by big drops. Many experts claimed that the crypto is the currency which could be used as a hedge during periods of high inflation. Well, that was believed to be true until last couple of weeks, where we saw most of the cryptocurrencies, including the most popular ones like Bitcoins and Ethereum, losing more than 50% of its value. Welcome to the channel, my fellow humans from planet Earth. If you own cryptocurrency of any kind or are planning to own one, you may probably be interested to know and understand what does the future looks like for this digital decentralized currencies. Stay tuned till the end. Let's dive straight in. Launch of crypto ETFs. With the first Bitcoin ETF making its debut on the New York Stock Exchange last October, it has opened a new door to conventionally invest in crypto. These ETFs would allow investors to buy in cryptocurrency directly from traditional investment brokerages they may already have accounts with, like Fidelity, Vanguard, etc. However, investing in a crypto ETF still carries the same risk as any crypto investment. Next, claims of decentralized systems. Many people who are supporters of Bitcoin and other cryptocurrencies claim that cryptocurrency platforms are decentralized. That is, they are not directly tied to any country, state, or government. Few people would also debate that cryptocurrency is superior to traditional physical currencies because it is not dependent on any government or financial institution. However, that isn't entirely true. Cryptocurrencies aren't really independent of the governments because they are still reliant on the underlying infrastructure powering cryptocurrencies like Bitcoin, and much of which is regulated by governments of the individual countries. For instance, the governments could theoretically make changes to cryptocurrencies at a fundamental level by imposing its will on the data miners who keep them running. Investments in cryptocurrency by big companies like Tesla. Many companies across multiple industries took interest and in some cases themselves invested in cryptocurrency and blockchain last year. For example, Tesla announced last year that it will be able to accept Bitcoin payments. And not only this, but they themselves invested billions in crypto assets. Fintech companies like PayPal and Square also getting engaged with crypto by allowing users to buy on their platform. Furthermore, if huge retailers like Amazon decide to accept payments in cryptocurrency in future, it could create a chain reaction of others accepting it, which may potentially add a lot of credibility to cryptocurrency. This in turn will have an impact on crypto prices. Based on the above speculations, the more this currency is used in the real world, the more likely the demand and value of it increases. Next, impact of inflation on cryptocurrency. Recent huge falls in cryptocurrency value proved that cryptocurrencies have hardly been immune to the inflation. This is because they are being hit by the same factors impacting stocks and other assets. Consumer prices are surging at the fastest annual pace in over 3 decades, and the Federal Reserve of countries like US is hiking interest rates aggressively to bring down inflation and have claimed to continue to do so in the coming months if required in order to cool down prices. This crash in crypto prices shows that cryptocurrencies are by and large speculative financial assets that are not immune to microeconomic forces such as changes in the interest rates. Thoughts on the future of cryptocurrency. Cryptocurrency has become a global phenomenon in recent years. Although much is still to be learned about this evolving technology, there are many concerns and worries swirling around the technology and its capacity to disrupt traditional financial systems. Having said that, it is still a speculative investment because of its lack of history on which to base predictions on, and hence, no matter what experts think or say, it's important to only invest what you are prepared to lose. If you were to wake up one morning to find that crypto has been banned by the developed nations and it becomes worthless, would you be okay? Is the question to ask. Well, the suggestion here would be to keep your crypto investments small and never put crypto investments above any other financial goals like saving for retirement or maybe paying off high interest debts, etc. If you found this video helpful, you may want to watch this video here, which talks about the mistakes that you should avoid during the times of high inflation. Hopefully, we'll see you again in future. Until then, adios fellow humans.